In this video, I'm going to share with you, we're going to go over 5 different ultra high yielding dividend paying ETFs, which can offer a substantial amount of income with a relatively small amount of money invested. And for this video specifically, we're going to talk about what a $5,000 investment would look like invested into each one of these ultra high yielding ETFs. Now, to be completely clear, every single one of these ultra high yielding ETFs offer a substantial amount of income consistently every single month and or every single week, but also offer a positive total return. So at least as of so far since inception, none of these are what I would consider dividend traps, at least off of the data we have to go off of. So if you want to see which ultra high yielding 5 ETFs I'm talking about and see how much income $5,000 invested could generate, make sure to stick around, drop a like down below, and let's get right into the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first ultra high yielding ETF, this is a no-brainer. This ETF could potentially offer investors a ton of income from just $5,000 invested. We're talking about QDTE, the Innovation 100 one day till expiration covered call strategy ETF. Now it says right here in the summary, QDTE utilizes a synthetic covered call strategy that seeks to provide current income on a weekly basis while also providing exposure to the price return of the Innovation 100 index. And by utilizing overnight exposure in the Innovation 100 index, this ETF generates a massive amount of income, at least it has historically, each morning by selling out of the money one day till expiration calls on the index. Now, to give you an idea of the amount of income QDTE, for example, has produced so far since inception, this ETF has paid investors anywhere from around 36 cents on a weekly basis, yes, I said weekly, down to around 9 cents at the low, and all the way up to around 57 cents on a weekly basis, which equates to somewhere around $1 to $1.20 on average per month. Now, because QDTE currently costs around $42 or so per share, that means an investor could potentially buy around 119 shares of this ETF with a $5,000 budget, which in turn could theoretically offer an investor around $142 in income on a monthly basis, which is incredibly high considering it's only $5,000 invested. Now, I also promise that we are not going to be looking at dividend traps, at least not as so far. So QDTE, just to prove it to you, with a $10,000 investment and dividends reinvested, would have returned investors around 8.19% total, around 17.7% annualized. This is since inception, or with dividends not reinvested, around 7.3% total, or around 15.9% annualized. So at least so far, this ETF has offered investors a massive amount of distributions, but also on top of that has offered investors a positive total return, which is amazing. The next ultra high yielder that can offer investors a ton of income potentially, which is $5,000 invested, is XDTE, the S&P 500 one day till expiration covered call strategy ETF, which is just like QDTE, only this one tracks the S&P. Now, to be specific, XDTE utilizes a synthetic covered call strategy just like QDTE that seeks to provide current income on a weekly basis while also providing exposure to the price return of the S&P 500 index. Now, because the S&P 500 is somewhat a little bit lower beta than the NASDAQ, this ETF is offering investors around a 34% distribution rate, which is lower than that of QDTE, but again, still absolutely incredible. Now, as far as the weekly distributions go for this one, we're still looking at anywhere from around 10 cents on a weekly basis, upwards of 30 cents on a weekly basis, somewhat lower than the last one, but still considering most ETFs or stocks will never see anything near these distributions, very impressive. Now, because XDTE currently costs around $52 per share, that means an investor would be able to purchase around 96 shares with a $5,000 investment, or that means an investor could probably earn, at least going off of previous distributions, anywhere from around $80 to $90 per month in distributions, which is still insane considering it's just a $5,000 portfolio. Now, since inception, not only has XDTE offered massive amount of income, but with a $10,000 investment and dividends reinvested, we're talking a 10.8% total return or 23% annualized. With dividends not reinvested, still 10% and 22% annualized, still offering investors a positive total return and massive distributions historically. Another ultra high yielder that has been paying investors massive amounts of distributions, but also offers a positive total return is SVOL, or the Simplified Volatility Premium ETF. Now, SVOL basically shorts the VIX, so unless the VIX is absolutely rocketing like we saw as of recently, SVOL is going to do pretty decent. Now, as far as distributions go, you can see that SVOLs are very consistent, around 30 cents more or less every single month, which I absolutely love. I don't like necessarily when ETFs pay a different amount because I like to sort of have an idea of how much I'm going to be earning every single month, which is just one of the reasons I absolutely love SVOL. Now, because SVOL currently costs around $22 per share more or less, that means a $5,000 portfolio could potentially buy around 227 shares of it. And because SVOL pays around 30 cents per share per month, we're talking almost a $70 in total as far as distributions go on a monthly basis from SVOL, which is massive. But on top of that, SVOL also has an average annual total return of around 11.08% with dividends reinvested, or even around 8.68% if, of course, you were to have spent your dividends along the way. Either way, SVOL has defied gravity and showed that an ETF, even that yields around 16-17%, can offer a positive green total return for investors while still paying a massive amounts of distributions. Another one of my favorites that can offer investors a huge amount of income with a $5,000 portfolio is FEPI, or the Rex Fang Innovation Equity Premium Income ETF. Now, FEPI basically buys into a basket of big tech holdings, and then with that, rights cover calls to, as you can see, offer enhanced income potential. And since inception, FEPI has offered around a 25% more or less distribution rate, which is not bad whatsoever considering how well FEPI's held up. Now, because FEPI costs around $51 per share, a $5,000 portfolio could purchase around 98 shares of FEPI more or less. And as far as distributions go, as you can see, FEPI's been paying anywhere from around $1.09, $1.15, $1.16 every single month, somewhere in the average range around $1.15. So that means with a $5,000 portfolio, FEPI could potentially pay an investor around $112 on a monthly basis, which is massive. But also along with that, FEPI, along with the rest of them, has offered a nice juicy return. We're talking 18.5% over the last almost year, or around 21.3% if we look at annualized gain. Or with dividends not reinvested, 17% and around 20%. Either way, FEPI's held up quite well. This is one in my portfolio, and I've been buying a little bit more FEPI even as of recently. Now, the last ETF that could offer investors a massive amount of distributions with a relatively small amount of money invested is YMAX, or the YieldMax Universe Fund of Option Income ETFs. Now, YMAX currently has a distribution rate of around 39.44% and has been paying investors anywhere from around 50 cents more or less to 60 cents, 70 cents on a monthly basis since inception. Now, YMAX is relatively new, so just like a lot of the other ETFs, I think we're really going to have to let things play out for maybe a year or so and see how things look as far as NAV decay, etc. But so far, so good. Now, because YMAX currently costs around $18 per share more or less, that means an investor could purchase around 277 shares of this one. And if YMAX pays anywhere from around 60 cents more or less per month, an investor could receive around $166 per month if, of course, they invested into YMAX. But on top of that, at least since inception over the last 0.6 years, YMAX also is in the green with a total return of around 12% with dividends reinvested, or around a 20% annualized gain. Again, this is only over the last 0.6 years, so we're going to have to see how things play out. But so far, so good. YMAX has been paying investors a ton of income, but also offering investors a total return, which is at least still positive. So there we have it. Those are 5 different ultra high yielding ETFs that not only offer investors, or at least have offered investors, a ton of income historically, but also every single one of these ultra high yielders have offered investors a positive total return, which is one of the most important metrics I like to look at when it comes to these ultra high yielders. Because at the end of the day, even if you're earning a ton of income, whether it's weekly, whether it's monthly, whether it's quarterly, if the actual ETF is dropping faster than the income is coming in, who really wants to invest into that? But now that we went through all these, I want to now hear from you guys down below. Out of all 5 of these ultra high yielders that we talked about in today's video, which is your number one favorite of all? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.